right, we've got signs of weakness in gold after it completes a measured move. But before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for gold. So gold has been overbought for some period of time. It doesn't mean much until we reach a potential target and we get a bearish reversal sign. So today is going to complete an outside day, which is going to confirm, or would confirm, with the daily close below yesterday's low of 4,200 roughly. And but it doesn't look like that's going to happen. Maybe there's about another hour or so to today's session, and so far that's not likely to happen. However, there is a bearish outside day, down for the day from the open and from yesterday, and in the lower half of the day's trading range, possibly in the lower third of the day's trading range. So this establishes an area of potential resistance that could lead to a correction, either with a move down or sideways combined with some down price action. Given the strength we've seen in this rally, it would be surprising to see gold hold above the 10-period moving average, the key dynamic support level, now at 4,099 and rising. But we also have this rising long-term trend channel here that was resistance, and now potential support on the way down, along with this top channel line for the smaller rising parallel channel. That, of course, now is below the 20 moving average, but let's see where they all end up as things continue to progress. Nevertheless, keep that in mind as well. Alternatively, a drop through the 10-period moving average puts the 20 moving average in sight and a likely target at a minimum. But right now we have a little further to go before that happens. Okay, one last thing is that any type of rallies are likely to see resistance inside this bearish candle. So keep that in mind if you're looking for exits or looking for entries or looking for shorts. The place to look is on the bounce inside this candle, if that happens, on an intraday reversal, if that happens as well. So the long-term bull trend remains intact, but in the short term, it looks like a correction is in order, which would be wonderful for gold because it certainly has gone quite a bit pretty quickly, and it's just not sustainable at this rate. And that opens up the possibility, the further it goes, that there's going to be a sharp reversal. And so far that hasn't happened, but it still could happen. So keep that in mind as well. All right, that is it for gold traders. Have a good weekend.